So I'm going to sit here, because you're tying up the one and only telephone line that we can do here. I think it's fair to say that our policy now, particularly because you found this, is going to be that people have to be a W-2 person. So what do we do if somebody comes in to us who is a TN and he's got his 1099, or he comes in and he's got his Canadian corporation? Are we going to, how are we going to do his tax return?
Well, before I answer that question, I think I just wanted to make one comment, and that is the people that I've run into that have this 1099 issue and they're convinced it's correct because they have talked to the company's immigration attorney.
Well, they, as a
who
rule,
used the two major publications. I have to state, the one I rewrote the tax chapter for was 12 years out of date. The major competitor was 14 years out of date in this specific regard. Just like tax people don't generally care about the intricacies of the immigration law. You know, we know what a TN is, and
the immigration people
read
don't.
the Immigration Act. I think it's just been lax, and the biggest problem is there is no resource material, professional resource materials that attorneys use that has the right answer in it. It's unbelievable to me that a subscription that costs probably $3,000 to $5,000 a year would have 14-year-old information in it.
That's true.
Outdated, obsolete.
And of course, that information came from the original Treaty Canada, which was passed in 1989 and obsolete in 1994.
We're talking back before TN visas with TC-type visas. We're talking that the prime source document, or the major source document quoted, is a letter from Immigration Services to Grasmick, the TN specialist attorney out of Buffalo or something, I believe.
Yep, in there somewhere.
Anyway,
Joe Grasmick.
The citation is a letter to him written back in the early 90s.
Yeah, likely by some second-level clerk.
Actually, no, I have a copy of the letter in amongst
well, when you get a chance,
papers a foot thick. It was pretty high, but even with a common sense reading, it was totally opposite to what the regulations said at that time. And the regulations haven't changed since on the TN visa. So it's this Employment Bulletin number 11 issued by Homeland Security that absolutely makes it clear about you are an employee and you can't even work for your own corporation.
Well, I've said that all along, particularly the own corporation. I have to admit that I haven't had a big problem with the 1099 because I brought it up. I'm not going to bother quoting any. I did bring it up with a very senior IRS lawyer several years ago. I talked to you about the same time. And the IRS lawyer said he wasn't too concerned about it because as long as they were working for that employer that they got the visa for, they were still an employee without benefits. Does that make any sense to you?
Well,
but again, it was over the phone.
And I have to tell you about, I've been at some high-level conferences in regards to the issuing of I-10s and that. It's certifying acceptance agents with the head office people in Atlanta. And there is an ongoing power struggle, so I'm told unofficially, and so I'll give you all my waivers right now, that immigration wants information from IRS. IRS will not provide the information because of the privacy rules. And so there's a little bit of a contest going on there where one will ignore the rules of the other. And so IRS is just taking a position of anything to do with immigration law doesn't come into their thinking.
Because they want to tax you. They want to tax you whether you have a visa or not.
Yeah. I mean, there is no illegal status for tax purposes. You know that. You're
That's
either
right.
a resident or you're not a resident.
Yeah.
Period.
They're tax residents or...
Right. For tax purposes.
That's correct.
Whereas for immigration, you might be a resident, you might be a non-resident, you might be an illegal or out of status
Yep.
alien. So there's sort of three categories there. And that concept, well, they just totally ignore that. They're going to look at the employer-employee relationship, the same sort of rules that Canada Revenue uses, control. Do you get to control how it's done, when it's done, where
What
it's
tools
done,
are used
or
and
do you
who
just
owns the tools?
rely on the eventual outcome and the person can do it how they like? The big problem is there's major penalties to the employer for failure to withhold.
Yep.
I mean, the penalties are felonies.
Yeah. And the employee who doesn't file their tax return and pay their U.S. Social Security, the both halves of it, can also be caught, and we've had this happen a couple of times, not from any we've repaired, but where people have done their own, just reporting it in Canada, and the tax office catches up to them. The amount of money that they owe is stupendous. So they're far better off being treated as employees and having the tax deductions made, because then the employer pays half the CP, half the Social Security and the Medicare.
It's not like Canada where it's CPP and employment insurance is a nominal amount.
Yeah.
I mean,
big,
it's
16%.
$15,300 if you make $100,000 income.
That's right, and these guys don't pay that and think they've got away with murder.
That's right, and 2 or 3 years down the road, the $15,300 has now become $20,000 with interest, penalties, plus the second year, plus 3 years. 3 years back.
Yeah, we should have had you on the line here a little while earlier.
So it sounds to me like if they don't want to participate in doing it the right way, that you could make some money by turning them in.
Well, we should be filling out Form 211, right, Gary? Anyway, going back to it, you still have to answer the question, or at least give me your opinion, of what do we do when somebody comes in and wants their tax returns done, who has had their U.S. employer pay their Canadian corporation.
Pay their Canadian corporation.
My position is just tax them on the full.
We can look at that in a number of ways. One, we can just say the Canadian corporation paid wages to a resident of the U.S., that being the owner, in the amount equal to the...
How much was received from the employer in the U.S.
Right.
Pass it right through with no corporate expenses.
Right. And...
because that's the other thing these guys won't want to do.
Then, of course, we have the treaty rules. If it's under 10,000, the 183 days, that type of thing.
But the other thing these guys all want to do, if I can partake, is they want to write off their apartment in the States because they got a Canadian corporation. So their apartment in the States suddenly becomes a tax deduction.
Well, they may want to do that, but, I mean, the U.S. rules are very, very clear when you get to do temporary living expenses, and it's totally different than Canada. Basically,
absolutely.
If you want to maintain a home in Vancouver and work in Denver, it's your choice to commute the 1,000 miles or whatever. There is no deduction.
That's correct.
For U.S. tax purposes, if you are expected to be in the new location for less than a year, then the meals and lodging would be exempt.